Hey traders, Bish here for your market wrap week ending 8th of March 2019. I'm just going to go through key themes, what happened last week, and any of the trade potentials coming into next week. So, key themes basically the same really for the last few weeks, which is, the global slowdown continues and the gift that keeps on giving, which is Brexit. Will that happen? So, let's jump straight into what we seen last week. So, several worrying signs about the healthy economy based on the last week or so, and ECB actually took some action. And what they did is they injected further liquidity into the Eurozone banking system to spur some economic activity and loan growth. When we're looking at China also looking to put some new fiscal stimulus at its manufacturing sectors, which investors became quite unsettled by that. Hence, we've seen a lot of risk off during the past week in the equity markets. BOJ Governor Kuroda affirmed that central bank stood ready to increase stimulus when it's needed to ensure Japan's economic recovery. Markets were also really hopeful for a US-China trade deal this week. The WSJ, the Wall Street Journal, reported that a deal was near and it would be completed on March 27th. But that began to fade during the course of the week because we've seen Kudlow come out and saying there was hurdles that still remained on a deal, which hit the sentiment of the market, and we had a risk-off scenario. Let's talk about NFPs. NFPs, well, they added 20,000 jobs in February, which is well below expectations of 180,000. This is the smallest number since 2017 September. We had construction employment contracting, but professional and business services like healthcare and wholesale trade, there were the sectors that added more jobs. But despite concerns of global slowdown, US remained resilient in both service and manufacturing activity in February, which indicated solid expansion. In December, we had new home sales rise, defiance of expectations for a sharp drop. Now let's talk about Brexit now. Okay, so what's been happening now? PM Theresa May said that if you don't back our deal and we leave the EU, then there's a possibility that Brexit may not happen. She also added that the uncertainty that's going on will hinder months that could be spent on improving our NHS, schools and communities. BOE Governor Mark Carney said on Tuesday the BOE would probably give more support to the economy if it suffers the shock of a no-deal Brexit, but the options are available to the British bank, which would be limited. So what he's trying to say there is we'll do what we can, but we're limited in our powers to suffer the shock of a no-deal Brexit. So let's look at what's happened in the markets. You can see it's a sea of red here, and it's been a risk-off scenario throughout the whole week. We've seen the VIX up 18.3%, but if you look at the US indices, we've had some hammering over 2%, and the Russell had a much more larger down week at 4.3%. FTSE was pretty much unchanged, and the DAX and the European markets less than 1%. The DAX had a 1.2% down week. Nikkei had a 2.7 down week, and also the Chinese markets had a down week of 2% and 0.8% respectively. Currencies. So euro dollar, we've seen the sell-off in the euro dollar, obviously due to the ECB comments. Pound has decreased also, and the USD, Japanese yen, has decreased. So it's been a mixed bag market here. I mean, your money would have been good on buying yen strength, so selling the euro JPY, GBP JPY, and also the USD JPY. In risk-off scenarios, especially in the indexes, yen is normally the safe haven currency to go into. So yen did quite well and outperformed the US dollar over the past week. So I'm just going to go into some trade ideas that I had last week. I'm going to start doing this in the coming weeks also, just to give you an overview what trades I took and where we are. So I pointed out last week that I was looking to short the S&P, buy the pound Aussie, and looked at oil as well. But there are other trades, but I can't take all of them, especially if there's no signal there. But this is the trades that I'm in at the moment. So on the S&P, I went short at 27.87. I'm looking to target 26.23. I've ramped up my stops at 27.51, and that's still ongoing. I have a feeling that I'm going to get stopped out probably in the week if we have more upside momentum. Gold, I saw some potential going in at 12.87. I was looking for 13.07, and this was a very painful trade. And this is what trading is all about. If you're patient enough and keep your emotions intact, then hopefully your trade works out. If it doesn't, then it hits your stop loss and it goes. But this was quite painful. I mean, I put the trade on Monday, and I was waiting really until Friday, when I said to myself, okay, in Friday, if this price action still stays the same, then I might just exit the position and revisit later. And lo and behold, during the early hours of Friday morning, gold started to rise. The reason why I closed it out, purely and simple, the NFPs were coming out, so I didn't want that whipsaw out of positions, so I exited the trade. But now we've gone pretty much, I think we close around 12.99, so any pullbacks now, if we have bullish momentum, would be a buy for me, and we'll see about that. Pound Aussie, I did say if you took the aggressive approach, which I did, then look to buy around the 185.20 area, and we got in at 185.18. I was looking to target the 190 area, which is around about 500 pips of profit. However, I got stopped out at 187.21. These things happen, but in hindsight, it was a good trade, 200 pips, and you see that there's a big reversal on that later on in the week. Crude itself, so I'm short at 56.08, and I'm targeting 53.22. I got a stop at 56.22. This trade is ongoing. I have a feeling that we might get stopped out on that position, but there's potential there. If the equity market starts to break down, we get dollar strength, we will probably see some momentum to the downside on crude. So I'm looking at that. So next stage now is probably go to the charts, and I'll let you know if there's any trade that's going on for the next week. But at the moment, I'm just happy with the positions I've gotten at the moment, and just waiting really to see what's happening, get more confirmation, and we'll initiate more trades. So I'll see you on the charts. Okay, so we're going to start with the S&P 500 weekly chart. As you can see here, this week we've had a bearish signal here. I mean, I don't know if this is going to be a reversal signal, but it gives a very good case for maybe more downside to come. We basically touched this resistance area that I've been highlighting since last week and the last few weeks. We tried to push above and we got rejected. Now we could simply be pulling back, and now just maybe a 50% off this rally, and possibly go back up again. So 25.84, 25.27 would be good areas to maybe look at to initiate long positions. If we start to drift lower than that, then possibly we could be looking to test the lows of December. If not, we might be going lower. But as of now, I'm just playing level to level, to be quite honest. I am a bit cautious as well, because on Friday we had a ramp up. The last hour we end up closing green for Friday, and that's been quite the case for every Friday, to be quite honest, for the last several weeks. So we're now down to the daily, and we've seen a double top, a little mini double top here. Just highlight it just here, this little mini double top, and we started to roll over. This 250-day moving average, you can see that we've tried to push down on it, and we end up closing up green for Friday. Now, where does that leave us with the US index? Well, to be quite honest, I mean, this can still pull back. This could just be a minor pullback, maybe into the 50% area. So we could probably look at 2770 to 2781, maybe to initiate shorts. Anything above that, then be cautious and probably just stand aside until we get another signal to go short. If we start to push above the 2818 level, then this could be initiation for longs once we get a rounded retest. But as of now, I'm quite constructive at the moment. I mean, I was short from 2787. So when I saw this red candle here on Monday, I initiated a short the next day at 2787, and my stop now is at 2751 area. Most likely that'll be taken out probably on Sunday or overnight or Monday. We shall see. But at this point of time, if I do get stopped out, then I will be looking at these levels to initiate shorts. And it's the same kind of process really with the Dow Jones and also the Nasdaq. One thing that's you should be you should be looking at is the Russell. Okay, Russell's normally been leading when it comes to sell-offs. You know, when we initially had this first sell-off, the top was 4th of September. Okay, and we didn't have the top until end of September in the other US indices. So, you know, again, the Russell for me is a leading indicator. So we've had this sell-off now. Again, it's struggled to blast above the 250-day moving average, and we're still in that resistance area. So anything here, we could possibly look at a pullback again to the 50% levels, to the 62% levels here. Again, same process of the S&P 500. If we get a pullback about 50 to 62%, then try and initiate shorts. If we start having momentum more to the upside, then stand aside. You know, it's not a problem, and look to initiate longs once we get that bullish confirmation. But as of now, I'm probably veering to more downside in the coming weeks. Okay, just go to FTSE. FTSE, to me, still constructive as of last week. I was initially looking at the 50% retracement level here to initiate longs. That's 6900 and 6816. So any kind of bullish price action around these levels will get me long. Otherwise, if this market starts going free fall downwards, then I'm not going to initiate any longs whatsoever. I'm just going to stand aside. Okay. Same with the DAX. DAX again looks weak. We've had this resistance area here. We tried to push above and we got rejected. Now we're looking a bit more downside, I would say. Probably another 50. Probably again a 50%. Does this mean that I'm bullish? Not really, to be quite honest. Unless we punch above this resistance band here around 11,700, maybe more higher, then I would look to initiate a long. But if you're feeling brave, then the 50% level around 11,000, 1090, 98 to 10,832 would be good places to initiate longs. And if we start to break up below the 10,400 level, then I would stand aside and wait for bearish setups. Okay. When it comes to the dollar index, let's look at what we've been. So dollar index, I'll just give you an overview. If you just go to the weekly, I think we're in this channel here. Okay, and I see more upside, to be quite honest, and I'm probably looking at top range of 98.52 and possibly up to the 100 level. If we start to break out even more, then we're looking to target these highs here, 103. This megaphone formation I have seen, possibly we are looking at 108, but obviously everything results into what's happening in the equity markets, bond market as well. That will show us the path for the US dollar. So if you think that US dollar is still going to be bullish, which I think that we still will have more bullish price momentum, then the other USD crosses would be a buy. But other than that, I mean, unless we break below the 94 level, then I can probably throw away that thesis of bullish dollar for the medium term. But anything else, I mean, if you just revert back to last week's video, you would see that I've been looking at breaking this level here on the euro, 112.30. We poked below it. We're not have a close yet underneath that region. So I want to see a close and then around a retest before I initiate a short. And you know, we've got some potential here for at least a few hundred pips around the 108 or the 105s, even down to the 103s, 60s would be a good target to reach. But take each level at a time. If we start to punch above the 115 area, then start looking at longs. But this could be a squeeze to the upside as well. But I think on a medium to long term, I think euro has a lot of potential to go down in the next few months or so. Short term trades, I'll just say if you're bearish on this, then look for a pullback before you initiate a short. Otherwise, short underneath a close of 112.30, and then look for targets that I have said before. Okay. Pound is pretty much the same as last week. Dollar yen is actually nearly coming to my area of interest. I did say that I was looking here for 50% retrace, and you know, the 108.50s to the 107.61s is good areas of interest, maybe to go long on this. So if dollar has a much more bullish price action, then we could possibly break out of this little wedge pattern, well, this large wedge pattern here, going back to 2015. And we could probably be looking at testing these highs around the 114.60s. So other than that, you know, there's nothing changing to my plan. No other new trades. So I'll leave you there for next week. We have the Brexit meetings on Tuesday, and we got one Wednesday. I think is the vote, right? 13th. So let me just double check. 13th is Wednesday, right? So there'll be some volatile days ahead, and we've got Powell speaking on Sunday, just after the Sunday Open. So make sure that you don't have any open positions, because there could be volatility ahead on that also. And if you're in the UK, make sure that we'll be starting trading at 1:30 p.m. rather than 2:30 p.m. Due to the time changes. So just be aware of that. So I'll see you guys next week, and if there's anything that I see that's coming of interest in the week, then I'll send another quick video out. So take care of yourself and happy trading.